Insurance, as you guys know, is something that's gone way, way up. What is happening, DeRosa Insiders family? This is Matt Faircloth, and welcome to the Cash Flow Digest. Let's take a minute and talk about insurance, okay? Insurance, as you guys know, is something that's gone way, way up over the last couple of years, specifically on multifamily and on everything. Even the home that I'm in today has gone way up on insurance. We've seen insurance premiums go up all over the place. A easy way to attribute that to is just good old-fashioned profiteering. Companies just looking to make a few more bucks and them having an excuse to raise premiums. Maybe that's what's going on. The insurance companies themselves are blaming it on lots of losses that have happened over the last couple of years, everything from COVID to hurricanes to make the list as to why they're increasing premiums. But another thing that they are falling back on is rising construction cost, meaning that if there is a major claim on your property and it gets burned to the ground, it's going to get rebuilt back up again. Insurance companies are saying, hey, the cost of lumber, the cost of HVAC, the cost of name it, electrical, plumbing, all those kinds of things has gone way up. And so we as insurance companies have to stay up with current market values for our replacement cost for what it would take to put your property back together, Mr. and Mrs. Investor. So they have increased premiums for all those reasons. Okay. Now, what's happened on the other side is property values are continuing to fall. Some would say partly because insurance premiums have fallen. Let me pause there and explain something to you. If you're investing in investment grade assets, such as apartment buildings, strip centers, triple net, whatever it may be, you are valued based on the NOI, the bottom line that the property that it makes. Now, this doesn't apply to hopefully it doesn't apply to triple net because you're passing those expenses on to your tenants in triple net. But for just about everything else, where you're paying those bills, your NOI is a indicator of the property value. And if your expenses increase as it would on a non-triple net property, you're going to decrease your NOI. Your NOI is going to start to drop on any property. And that could happen because of increased insurance premium, increased utilities, increased whatever it may be, or decreased revenue on the revenue side. So why ever NOI is decreasing, it will decrease the value of your property because it is based, real estate's pretty much based just like any other investment class is. The price is directly correlated to how much money the asset will make you. So if a multifamily asset's making $100,000 per year in NOI, bottom line net operating income, which is pretty much the money you make before you pay your debt, right? If it's making $100,000 in NOI, there is a certain value that the property's worth that's a multiple or a divide by on that. Then that's the cap rate. Okay. So if it's a 6 cap, you're taking that 100K, dividing it by 0.06, and that tells you what the property's worth in today's numbers. Now, if your insurance premium on that property goes up by $10,000 or $5,000 or whatever, and you don't do anything else on the property, then you went from 100,000 down to 95,000, which is interesting because multifamily values are already going down and insurances are going up. So the article that we have for you today is really pointing out that interesting squeeze that we're in today, because we're in an interesting market where expenses on multifamily is going up, right? But values have already decreased. We've seen significant value drops of upwards of 10% in certain markets. This article in particular talks about West Palm Beach in Florida, upwards of 10% in property value drops, partly because of insurance, especially in West Palm Beach, which is a low-lying coastal area, right? So the thing about real estate, guys, I want you guys to take home today is that real estate is a slow moving machine. I was around in 2008 when the market crashed. And what happened was a lot of crash happened on the stock market and financial institutions that were running a lot of these, derivatives that were correlating property prices. But that was like a pebble in the pond. That what happened on Wall Street. It was a pebble in the pond, and it didn't really affect real estate pricing for another 6 months to a year. It's not, real estate is a slow moving machine, which makes it a beautiful investment because it's slow moving and it's slow to react. And so you got plenty of time to clean things up and course correct and whatnot with real estate investments. But the other downside of it is that it's slow to react. And so it's hard to tell what real estate's going to do. If you say, well, geez, the stock market just went up 10%. How's it going to affect real estate? Well, I don't know. Call me in 6 months and I'll tell you, because a lot of the things that affect real estate don't affect real estate directly or in an immediate fashion, a la interest rates increasing, a la all the money we printed during COVID, a la all those things. We're now seeing the slide in real estate. And so have we seen the end of insurance premium increasing? I don't know. What do you guys think? Tell me in the comments section if you think that rising premiums are going to affect prices for longer than today. If we're going to see another year, 2, 3 years worth of declining prices, partly because of increased insurance premiums, or are we done? Are we about to, has that been baked into the pie already? Arguably, you could say that it has, because a buyer is underwriting a property that's buying a property today. They're buying it based on performance, and they're buying it based on what their numbers are saying the property is going to do. So of course they're going to be smart enough to use the new insurance premium. So maybe you could argue it both ways, but let's discuss that in the comments section. Are properties priced appropriately because of rising insurance premiums, or do we have more to fall? Check out the article. We're going to post it here in the comments section. We'll make sure to post it on YouTube when this goes out on YouTube as well. Love to hear what you guys think. Thanks for watching, guys.